Text and you realize it's not ranked.
All right, let's see what happens here.
So you want to bring us in then?
I mean, I'm pretty
Or
sure.
Going live, pretty much.
Pretty sure we're going live. It's gonna be a hot drop.
Get ready.
Let's see. I just need to make sure that I can hear both of you. All right, here we go. All right, I hear you. Let me see if I hear you. Hold on. Okay. All right.
Boom.
Well, we're live, baby. We're live.
We are live.
We are live. Layer1Live. Say it one more time. What's going on?
I love it, man. I like the live setup. Shout out to anyone out there listening to us. This is our first Layer1Live, so we're gonna build on it a little bit. You know, it takes time.
Yeah, absolutely. I'm excited. Just got back in town into Pittsburgh from New York. Great to be back. Great weather.
How was New York?
Oh, it was great, man. I love that city, you know. But I get too much of it, you know. So like after some time, I'm just like, get me out of here, you know, somewhere quieter. So
right, yeah. You can only do New York for so long, for sure.
Yeah.
Was that business or pleasure?
Both. You know, I like to combine them both. Business is pleasure.
True.
Hey.
If you're doing it right, it is definitely.
Exactly.
For those of you that are just tuning in right now, we're doing a new segment. We're kind of breaking out what originally was like one episode where it would go about an hour and a half. Obviously, short form content is the new king, so we split that up. We're going to be doing Layer1Live on Mondays, and we're going to be doing the interviews to hopefully be dropped Wednesdays. Now Thursday, I believe, is going to be the episode this week. We have Lawrence from IOST. What's his position there, Mike?
Yeah, he's basically the head of business development, which, you know, now that we've launched mainnet, we've built out the node ecosystem very well. Obviously, we had the IGA, the IOST Global Alliance launch. Biz dev is, I'd say, probably more important than it's ever been. So he's really kind of at the front of IOST from a, you know, both retail and institutional standpoint. He's on the ground out there getting it done.
Gotcha. Yeah, we had a talk with him last week. That was an interesting call. We give him updates from the nodes in the IGA and what we all have to talk about. We kind of pass it on to him, and he kind of relays it. So there's a little bit of action going on between us. But yeah, we're excited for that episode. That'll be probably 1 p.m. on Thursday. That episode will drop, so be on the lookout for it. But other than that, man, comments, like, subscribes. If you're going to comment on this video, we are doing a $25 BTC giveaway for one commenter on this live video. Since it's our first time live, we want to do a giveaway. We're always great at that. So that's what we're going to do here for this episode. So if you're in the channel now, comment, we might be able to pick you. Other than that, we have that one token giveaway. Do you want to talk about that, Mike?
Yeah, for sure. So if you tuned into our last episode, you saw that we're giving away $50 worth of the Harmony token 1. So we're not giving away one single token. We're giving away one token's worth $50. We had Nick White on the podcast for, was that episode 3, 4?
I think it was 3.
It was 3, yeah. 3. And, you know, essentially those who went out and engaged with us, right? We wanted a follow on the new Twitter, Layer1Pod, at Layer1Pod, the number 1. You had a chance, you know, if you followed and commented, you had a chance to win this $50 worth of one tokens, which price wise, you know, right now is probably the best time to get them because we're all hurting from an alt standpoint. So that will happen. That announcement essentially will happen on the podcast with Lawrence. So.
Okay.
Nice.
Yeah, awesome, man. So we'll get into it. Again, that giveaway goes. We'll announce on that episode, like Mike said, on Thursday. But that giveaway will continue to go, and we'll choose on the podcast. So hopefully you guys can get in there. But what's our first breaking news, man? I want to get into the episode here.
Dude, it's a big one for sure. The SEC has been more and more active this year. I feel like last year in 2018, they were kind of like, or at least everybody was kind of like, the SEC is just waiting. You know,
they were loading up on lawyers, man. Loading up on staff.
Yep, 100%. And one of the largest ICOs to date, Telegram, was kind of quote unquote suspended. Essentially, what happened was, at least as I kind of deciphered it, was that some of the investors who as a reminder, the Telegram ICO for the TON, the ton tokens, it was pretty much all private, right? It wasn't a public sale, so maybe Telegram was thinking that would help. I feel like there might have even been minimums, like $1 million minimum or something. Just kind of speculation there. But I think what happened was the US investors into Telegram, which was a few dozen, maybe like 36, 40, something like that. I can't remember the exact number, but it sounds like they went to the SEC and were worried that Telegram was not going to deliver the ton tokens on time. Because Telegram essentially said that, if you give us X amount of money, you will get the tokens by the end of this month.
Right.
Then we heard today, though, this morning, that evidently Telegram's been talking to the SEC for like 18 months. So this is kind of ongoing. So it could just be a little jab from the SEC. Obviously Telegram's a massive company, massive messaging app that has far-reaching consequences for privacy and a lot of different things. So, maybe the SEC hasn't gotten what they wanted, and now they're kind of pushing back against Telegram. So this is far from the end of the story. It doesn't really have any effect on the Telegram messaging app. I would doubt anybody out there has any ton tokens or ton tokens. The only effect it has are on those ultra rich that got in and, maybe now are a little bit worried that the few million they put in are not going to be worth a few million whenever they get the tokens, if they ever get the tokens. Yeah, so
refresh my memory here. Was it a private sale that they were continuing? Is this a live sale? What's going on here?
No, so the sale closed. Okay. They raised 1.7 billion.
Okay.
So a good bit of money raised. The majority of the money raised was from outside of the US, or at least the majority of the investors were. There was something, like I said, like 3 dozen or 4 dozen investors in the US, which I imagine is why the SEC is involved, because Telegram, in a lot of ways could be shown as offering a security,
right,
without having obviously gone through the necessary registration. So 18 months ago, it sounds like the SEC knocked on their door and they've been cooperating to some deal. And this is kind of the first thing that we've heard publicly, that there might be some issues.
Watch, they're going to settle for like 1 million.
Exactly. Who knows? Maybe the SEC wanted 100 mil and Telegram said, no, we'll do, 75.
That's probably
putting the pressure on them.
It's interesting because how does that affect the token sale outside of the U.S.? Obviously, the SEC is part of the deal when it comes to U.S. investors. That comes with the territory, but you said they raised a majority outside the U.S. Who the hell cares in that sense?
Yeah, and as I guess it kind of depends on the way that you look at it. But when you're a giant, media company already, and then you go and you raise $1.7 billion, you're exactly right. There's not really a ton that one country's regulatory body can do to really derail you. Unless you're like a Kick, where you're just out here like telling everybody it's going to go to the moon in the white paper. You're going to have issues, but Kick even then is much smaller than Telegram.
Right.
So I would guess that worst case, PR is terrible for Telegram. They were looking at doing a public ICO for another token they were going to call the Gram token, which, so you'd have like the ton tokens and you have the Gram tokens. There's probably some, thievery on the back end where the ton tokens can then be converted to the Gram tokens at like 3-to-1 or something. And then it was going to be staking. So worst case is it, bad PR, delays the project. Maybe the US investors get refunded in full with interest or something, but I don't really see Telegram going away. The benefit to this, I think, and I saw this on Twitter from Nick White from Harmony, same guy we had on the podcast, the third podcast. He had an interesting point about how he believes that only small projects with kind of agile teams are ones that can launch a cryptocurrency network and either launch it fully decentralized from the jump or launch it and move it to a space where it can be fully decentralized. So, yeah.
Well, I don't want to skip ahead here, but that's kind of what's happening with Libra, right? You have that huge company or a conglomerate of companies that are having trouble launching a decentralized product, you can see a lot of people jump out, but we'll get to that here in a second. I've got this icon loop blockchain ID service. They raised $8 million in a Series A. This was a basically they're working on digital identification, which is a huge, obviously, benefit of having blockchain, and it's definitely a sector that I'm keeping my eye on going forward. But they raised $8 million in Series A. Icon Loop is actually we talk about a lot of protocols on this podcast, but we haven't talked about the Icon network. So this is kind of their flagship DApp, if you would call it that. But yeah, basically they're going to launch it to 27 companies. I don't know exactly when, but it's called MyID. Those original 27 companies are going to form the MyID Alliance, and basically they're going to launch this very soon. So hopefully after that initial rollout to those 27 companies, they can start iterating, maybe even offer it to the retail investor, because that's, again, there's a lot of cool use cases for blockchain. Digital identification is absolutely one of them. Yeah,
100%, especially with kind of the voting season here in the States coming up. I know that's been a kind of digital ID, digital voting. That's a growing topic right now.
What is it? Zero proof, like knowledge, or zero knowledge ID or something like that. We talked about this like in the past, where basically you can verify somebody without taking their information and knowing like all these things, about them.
Yeah, ZK snarks are one kind of popular method for those zero knowledge proofs. Yeah. But yeah, that sounds super interesting. On the kind of corporation point, Deem.
Yeah.
We got some Libra news. What happened?
So Libra got wrecked basically. It was a string of major players that are going to be, we're planning on participating in Libra network. Basically just, use that meme of, all right, I'm gonna head out, SpongeBob. So basically the language that they use, it seems like it was all synced together. So you can see these companies like Visa, MasterCard, eBay, Stripe, they use a similar language when they describe their, why they're basically leaving, and the language there is basically saying, hey, yeah, we're going to focus on our primary strategies for our services rather than, kind of participate in Libra right now from the start. But we're going to watch Libra very closely and monitor. We still believe it's a great idea and so on, right? So they're just kind of taking a step back and probably just sit and watch how this plays out. But really, like probably what happened is that they got pressured from regulatory standpoint, right? So from all these regulators from different countries, that voiced their opinion about this Libra coming up. And I think for these companies like Visa, MasterCard, eBay, all these legal fees that they have to put up to, pay for this, they don't even know how successful Libra is going to be, and I think that just takes away a lot of focus from their primary business and causes a lot of like liability, potential for liability. So I think that's why they're taking a step back because of the regulatory pressure. But still, Libra still has some major players in it, that are still in there, right? So
25% of the original backing members or partners, however you'd like to say it, have dropped out to this point. What do you think they get to, percentage wise? What does that get to?
Like that are dropping out?
Yes, that will be a drop out of the Libra Association.
That's interesting. Yeah, that's based on like how quickly these guys moved all in sync. I think for now it might be it. I think we might just stay with the 25% right now if we're speculating. Because I think they've all kind of sat together and agreed on together, to announce this in a short term.
Gotcha.
So.
And you would have to think that they knew there was going to be some hurdles that were going to come when they launched this. I mean, if you look at who's dropping out as well, I mean, it's Stripe, PayPal, Visa, MasterCard, right? Like this is their business, right? Their business is transacting value globally. So why am I going to join a competitor in a lot of ways to do that kind of quote unquote together?
Yeah, I remember one of the members of the association. I don't know exactly which one, but I saw on Twitter that they were looking to do their own digital currency. So I don't know I saw it on Twitter. I don't remember the exact story, but it makes me wonder how much of this was actually them probing into what Facebook's doing with Libra, and then taking that information.
That's probably
It's like seeing Western Union at those conferences. Like I saw Western Union at the Malta conference. I'm like,
what?
There's some interesting things going on here. You guys are Trojan horsing us right now.
Yeah, buying a booth for $15K to get the inside scoop. Yeah, I mean it's an interesting time for kind of big corporations moving into crypto. I mean, whether it's a conglomerate like Libra or it's gaming companies, right? We saw EA kind of teasing with some Apex Legends stuff, saying invest in crypto when it comes to gaming, and obviously on the institutional front, you have more and more. Be it futures platforms launching or pension funds or endowments kind of dipping into Bitcoin. And Dean, we had an interesting one here announced. I mean, this is pretty breaking. FXCM has launched a basket of cryptocurrencies.
Yeah, I was shocked to see this. So this actually just came out of the bakery today. So FXCM, Forex Capital Markets, I worked for this company for 5 years. And it's interesting to see them. So I've seen them actually do like crypto research now, but now they're actually introducing a basket of currencies, which is, let me take a look which ones are included.
I think it was BTC, ETH, Litecoin, Ripple, and Bitcoin Cash. So
yeah, and they're weighted all equally in the basket. And also keep in mind, this is actually a CFD product. It's a derivative. So it's not, actual like physical currencies that you buy. And, there's obviously benefits for with this because like, you don't have to set up a wallet and all those things, right? And especially for like FXCM clients, who really just do it for trading. They with one click of a button, they can buy this basket of currencies that's a CFD, and essentially have exposure to crypto. Now keep in mind, like FXCM, it's if you look into the actual company, it has quite a bit of history when it comes to actually losing their trading license in US because of sequence of events that happened in the market with the Swiss National Bank unpegging from Euro, which caused like the negative balances and a lot
major
of people,
crash.
Yeah, major crash and so on. So they actually lost U.S. clients, so they can't operate in U.S. But they can still operate overseas. And overall, I think for them, it's just like kind of like stimulating their just whatever the clients that they have still left. With this new product, and it's also the ability for them to earn more revenue as well, because when you're buying, when you're using this product, there's a spread, right? So when you're spread between buy and sell, right? So when you're entering into the CFD contract, when you're buying it, you're actually down an X amount of dollars right away, right off the bat. That's the broker's fee, essentially. So I mean, it's interesting to see this. There's other brokers that already released these type of products, CFDs, like in Forex. We have IG, who that's huge, and CMC, that's huge as well. Forex brokers that are entering.
Not CoinMarketCap.
No.
is there a benefit to Forex getting into crypto other than like other financial institutions? Like, is there a side benefit of actual Forex institutions getting into crypto?
I think it's a more natural user base, for cryptocurrencies. So because, myself, as I kind of exited the Forex industry into crypto, it was very natural for me to get into trading that, because it's, it's kind of very similar in that way. So yeah, I think the user base in Forex, and actually I found this out when I went to like conferences and I would meet people, and a lot of them come from Forex, and they, merge their platform, or not merge them, but move their platform over to cryptocurrencies or like the trading algorithms and so on. So and they apply them into crypto. So it's like a natural move, and it's very popular in the Forex community to move, away from Forex into crypto, because Forex is kind of dying out in terms of volatility now. And especially with the deleveraging, or with all the regulations that are happening around Forex, crypto is like another way for them.
So
also, speaking of,
Yeah, go ahead, Dima.
Speaking of the leverage, by the way, this CFD product is going to offer you 4-to-1 leverage on your basket.
There's just leverage anywhere you look right now, pretty much. I'll be interested to see, just as a quick final point on this note here, how kind of the concept of the basket does. Right, we talked about this a handful of podcasts ago, but Coinbase for a long time, I think they had set stable baskets, and then you could kind of make your own basket maybe, and they pretty much just nixed that whole product. I'm sure the user is a bit different between Coinbase and FXCM, but if I'm trading on FXCM, I just probably want just Bitcoin and ETH.
Right.
For me, I don't want XRP. Don't give me any of the.
And you know what? They had regular currency baskets when I was working for them, and let me tell you, did not work well. Like people were messing up on their trades with that product. Yeah. So I don't know why they're doing this 2.0.
And it's interesting that they're weighted equally, to Mike's point. Like it's surprising that it's not Bitcoin heavy or Ethereum heavy. But what I heard when Dima said that, not coming from a Forex background, is that Forex people are gamblers, and it started to not have any return, and they jump over to crypto. So hey, in the middle, just a little bit. But in the middle of all that, we had some comments, mostly about my mic. So when this gets edited and sent to iTunes, that mic will be a little bit higher. I'll put the volume, but it says, and shout out here, Scott Harris Firestone says, Zach, your mic is always low. That's what happened. And Mugat said, Zach, your mic is very low. You got it now. Just don't speak close to the mic. So I appreciate all this. This is working through our first time through YouTube Live, but actually you guys just entered into the $25 Bitcoin giveaway. So
boom.
That's it. We might be able to, pick one of two. We'll see what happens.
50-50.
50-50.
Speaking of volatility though, and price.
Yep.
Deem, just, real quick, obviously we get the full breakdown through Dimitri's desk, but what's the deal with Bitcoin? It's been decently steady, it seems.
Yeah, it's been moving sideways. So I'm going to be excited to talk about it tomorrow. I'm going to release the new Dimitri's desk. So I've been watching this, and I've talked a little bit about it on Twitter, where essentially the price is below the 200-day moving average, which is big, and it's kind of like hugging that 200-day moving average right now, while the 50 is still above the 200. So it's just interesting to see. We've been trying to break the 200-day moving average on a daily basis, multiple times, but it seems like we can't. And a lot of people are calling for a pullback to like 7,500, 7,800 right now. It'll be very interesting. I'm excited to see how the buyers will react once the 50-day moving average is going to start getting close to that 200, where that cross, the death cross, right? The golden cross. Yeah. So, if that crosses, then, then it's all right. That's a bear market right there. But in that situation, we might have a lot of buyers that are going to hop in and try to hold that support, and might get a bounce. It actually happened like that before, where we had 50 that got super close, and then the buyer stepped in, and we just went right back up.
So if the 50 days under the 200 and they cross, that's no good. That's bad. Or the opposite.
If the 50 crosses below 200, or what do you mean?
So like right now, the 50 is under the 200, right?
No, the 50 is above 200.
Oh, 50 is above.
Yeah.
Okay. So if the 200 crosses the 50 when the 50 is above the 200,
right?
We're wrecked town.
Yeah. Yeah, I mean, it shows on a daily. Yeah, if it shows
Damn, just tell me when to sell, man. Just tell me when to sell. Yeah.
It's not a financial advice.
Of course.
So yeah, that's interesting. And also, really quick, I mean, I'm going to cover this on the desk as well. I was watching how the CME futures are positioned, especially specifically the sell side guys, like the guys who make the futures product, because they usually keep their book like net, even, unless they see an opportunity in the market. But actually, I just recently checked, and they just built out a huge long position.
Huge long.
Yeah. So that's interesting. Obviously, those guys can float losses, right? More than regular
more
traders,
than any of you guys
right?
out there.
Yeah. They're not building out this long position to be stopped out like 5%, if it moves against them. So that's very, interesting to see as we're in this, moment where we have the 50 getting closer to 200, and the price is trying to break the 200 but can't, so it'll be interesting to see. Those guys have been actually pretty good. I've plugged in there, like, where they were heavy on longs or shorts, and they've been making some money there.
Yeah, I'd be surprised if we go lower than probably like 7,800. Then we're starting to get like 50% down from the high we saw earlier this year. But you never know. Be prepared for everything.
Mike, have you or Dima, have you been following that ratio between longs and shorts? Because that's something you always talked to me about when you were looking at Bitcoin. At least, how's that ratio doing?
It's been fluctuating. Honestly, the reason why I follow that ratio for longs and shorts is because it actually came from FXCM. Back in the day, we had an indicator which is called sentiment index. And what it does is shows you how the retail market's positioned long or short, and then basically do the opposite because retail traders lose money, right? So basically, if everybody's heavy on the long side, you want to look for short opportunities. But in crypto, it's actually different. I found that even though you can have, like, let's say everyone's skewed to longs, the longs actually might be the right direction for crypto. So it's different from FXCM Forex. But keep in mind, the reason why it works that way is because in the leveraged market, if you have price action that moves against you, it starts liquidating, right? It starts triggering those liquidations, and it pushes the price lower or higher, whichever way whichever way it's skewed. In crypto, I followed it a little bit, but I like following more of a CME futures now and see how those guys are positioned.
Yeah, evidently those are up too as of late. I don't know if Bakkt had anything to do with that, and kind of like revving up the engines again. But I read something, I think it was around ETH, which we'll talk about next. How essentially ETH has been deemed a commodity, but derivatives are pumping. I mean, Binance is doing well. We'll talk about their volumes, but very very interesting. It seems to me like 4, 6, 12 weeks, however long, we're going to kind of, as we often do in crypto, look back at this moment and be like, damn, we were at 8,200 or whatever. And it always seems to me that you kind of have the holders or the investors versus the traders in a lot of ways. And the traders on one side are always looking short, always kind of prepared for worst case, whereas holders are just riding the wave. And when everybody thinks we're going short, right? Everybody thinks we're going to 7,200 or 7,500. It seems often we don't get there, but that's not financial advice. We're just shooting the shit here. Pretty huge. Let me get into ETH here, because ETH has just been bopping around from a price standpoint. They had a giant conference. I believe it's an annual conference every year, DevCon. So this was DevCon 5 in Osaka, Japan. Bunch of news there. Like I said, the first big one is that it has essentially been declared a commodity by the CFTC. And the chairman went so far to say that he thinks many derivatives will be out and about within the US for ETH.
Oh, wow.
Over the next 12 months, which to me is like, for a chairman to say that, like, you don't really, there's no reason for him to say that, other than just to kind of, for PR to get his voice out there from a news standpoint. But
he wants to be like Giancarlo. That's what it is. Crypto
he's looking for crypto uncle or something.
Exactly. He's looking for those follows.
Yeah, for sure. Well, everybody wants some Twitter follow. But yeah. But this, I swear to God, months ago, I like saw this coming, right? Like ETH is the natural next step.
You had a dream.
I had a dream. And I think it's finally coming to fruition. ETH could be a massive mover. Most of the DevCon talks and discussion was around ETH 2.0, which for those who don't know is essentially kind of a 3-step multi-year transition phase to take ETH from proof of work, which is what Bitcoin, is based on, to proof of stake, which is obviously a lot of what we talk about. It's kind of the newest, hottest, protocol essentially. And most projects nowadays are proof of stake because of the benefits it brings. So
it'll be
ETH is.
Do it. Just do it.
Do it.
Fuck it. I'm doing it live. Excuse me. So, just real quick, right? There's a lot going on Twitter. There's a lot of people saying ETH's dead. A lot of people saying ETH is going to be, 1 million transactions per second. There's a couple kind of key takeaways from the conference. I would say number one is that the ETH community is as healthy as ever, right? I think Joseph Lubin came out and said that they have hundreds of thousands they have 200,000 devs, which is complete BS. It's not, they don't have that many, but they have many, many thousands of developers, and they want to get a million developers and all this. So the conference seemed to be a big hit. The community is super healthy. Some of the issues that people have brought up kind of as takeaway too is that when the migration from ETH 1.0 to ETH 2.0 happens, they're saying that not only will it not be seamless because it is a major transition, but it will cause so much headache for developers and applications and whatnot on ETH that it could have, some serious impact. It could really hurt or kill ETH. This went around for a day or two until Vitalik, who I guess while at the conference, while doing that hustle, came out and posted 2 giant research papers about how that will not be the case. So Vitalik, what is it, 5-6 years later out here still hustling. One of the biggest concerns, one of 2 concerns has been that when the transition happens, a lot of the code from these various applications or just, a lot of kind of the sideline code for ETH will no longer work, won't apply. Vitalik basically came out and laid out in more ways than one why that won't happen or why he thinks that won't happen. The second piece is that not only will some of that code, or some of the smart contract code be screwed up, but a lot of the applications on ETH that we're talking to each other, that we're communicating, will no longer be able to do that. He also refuted that. He's had a busy week. That guy needs some sleep, I'm sure.
Yeah, absolutely. I think when all this happens, I'd like to keep my eye on the DeFi space that's growing within ETH, because that's really the part where you're talking about security. You're messing with code. You're doing a whole bunch of things with this quote unquote what's going to be termed a fork. I'm guessing, correct?
Yep.
They're going to be moving. So it'll be interesting to see who stays and who goes. I think you're 100% right that the developer community that ETH has is its number one asset. If they can move all those people over to whatever they're trying to do next, they're going to be successful at it. But it's interesting to see, with all the money locked up in DeFi right now, messing with code and messing with all this stuff, there's a ton of money at stake. So
a lot of risk.
Yeah, definitely. So what I'm gonna need Mike to do is move over just an inch to your left so that you don't look like Jesus.
You get closer,
time you
man.
talk. Yeah, there you go. The light's coming directly behind you.
I like looking like Jesus.
Dima, you got it, man.
Yeah, I was gonna say there was an article that came out that ETH is a scam on CoinDesk. Did you guys catch that?
No.
Yeah, I mean that was debunked quickly by crypto Twitter. But I met up with Staked, that US, and the guy's name is Cole. He's an account manager there, and he's big on DeFi. So we had a good conversation about ETH and DeFi there too. So it was pretty interesting.
Yeah, it'll be a long process, right? I think one thing that people forget is that this 2.0 transition, right, where ETH is really attempting to solve their scalability issues. It's a multi-year, multi-step process in the same way that ETH 1.0 was a multi-year, multi-step process. It won't all go smoothly, at the end of 1.0, we now have, Ethereum Classic and that was kind of from the jump with ETH. Yeah. So I would guess that they'll be okay. There won't be major issues, but I'm sure there will be some hurdles. I'm sure there will be some massive FUD out there when things go wrong. So
yeah, absolutely. I mean, Mike, I know you're one for analogies, and it seems like, and to the next story, it's going to kind of relate to this, but it seems like ETH and EOS and a lot of these protocols are kind of moving into post-adolescence almost, where you kind of have you kind of have had issues in the past, but they were still kind of nascent, still kind of new. Right, but just like this EOS governance proposal that was proposed from the EOSNewYork team, I like to see that these things are working, right? And when I say working, I mean that it's alive. Right? It's not pulling a Hoskinson over there with Cardano, where it's kind of just sitting there. All of this stuff is so fun to see. It's so fun to see ETH try to figure out its scalability issues. It's so fun to see EOS try to figure out its governance issues as it's live, I just really love it. So it will be interesting to see what happens with ETH. But as far as this proposal goes, this was dropped, I think, like 6 hours ago. So guys, don't hate on me for not having all the information here. But basically, EOSNewYork,
which is one of the block producers for EOS, obviously, right?
Yeah. If you guys aren't familiar with EOS, it's one of the main block producers. In the beginning of the network launching, they were fairly high. They were in the top 10. Top 5, I don't remember exactly, but they were a fairly high block producer. Now they're obviously outside the top 21. This has been an ongoing issue with especially Western block producers. But so there's been a ton of governance issues on EOS. A ton of we had Ash Oro on talk about staking rewards and how there's two sects that one really likes voted rewards and one doesn't. So this proposal that was laid forth by EOSNewYork, there was they pretty much had to deal with mainly two things, right? You're talking about voting. So I'm going to read it word for word here. Obviously, I want to go back and do a little bit more research, but basically they're turning one token to 30 votes into one token to one divisible vote. So I'll read that. Yeah, Scott, they have been putting in a lot of work. Scott just said EOSNewYork has been putting in work.
No doubt.
So about voting, one token, 30 votes is changed to one token, one divisible vote, where each additional block producer voted for further divides the total vote weight rather than multiplying it. Coordination of votes between large stakeholders is no longer possible. The ability to vote oneself into a BP spot with a large enough stake remains. So I know we talked about this live here. What did you guys think about that specific part on voting?
Yeah, and it was obviously a quick discussion beforehand. I think it's, with the little bit that we read there and a little bit we looked into it, I think it's a good step forward. Generally, it seems with these governance proposals, they're kind of a good idea and they get us like 90% of the way there. But as is always the case with crypto, I'm sure there will be a loophole. I'm sure there will be a way that somebody can exploit this. But, essentially, just as additional context on EOS, right, the problem has been that all of the exchanges, right, especially those in Asia, have basically taken over the chain. They've taken over the governance of the chain, where you have to have something like 15 out of 21 block producers agree on the direction of EOS, right? Important updates like, all the way down to the code line updates, right? Mm-hmm. Things that could drastically affect the network. Where if out of those 21, if 17 are all kind of created and managed and incentivized by these Asian exchanges, now you have a giant problem with collusion. You have a giant problem with the initial governance setup that has existed for EOS. So, if it's a Bitfinex, right, who has millions and millions of EOS, they can essentially take one of those votes and vote for as many as 30 block producers, where each vote will equal one vote. So now, if they went and voted for those 30 block producers, one of those votes including themselves, that one vote would not be worth essentially 30 votes. Yeah. It would be worth, 1/30th of a full vote.
Yeah.
So, that article, I think that article from EOSNewYork does a good job of summing up basically that hopefully this helps solve collusion, because the votes are not 1-to-1 to 1-to-1. They're divisible. The more people you vote for, the less weight your vote is. But we'll still allow the concept of proof of stake, where those who put the most money into the network, right, who then are theoretically incentivized to do good for the network, we'll still have that kind of baseline proof of stake or delegated proof of stake incentivization model there. So, I mean, like I said, baseline for me, I think it's a good step. EOS has had a ton of wins recently with the stuff in DC. They got that giant grant from the state of Virginia. The win with the SEC that we talked about last week. And now some good governance proposals.
Yeah, there's a lot to unpack here. They're talking about having inflation, basically 100% of inflation is awarded to token holders through staking rewards via staking and lending to Rex. This makes sure that the CPU and net isn't diluted when you're using it, which is the case right now. But they also have a staking rewards. And again, a lot to unpack. Basically, voting diverts 50% of inflation you would otherwise receive, where 20% is earmarked or burned and 80% is sent to this block producer rewards pool. And basically, their proposal is that this block producer rewards pool, the BPs are getting paid out of that in effect of what rank they are. So if you're number one, you're receiving a certain amount that's locked from this block producer reward pool. So all the way down to the very last, as opposed to the big drop off you see after the top 21. So we'll unpack this a little bit more. It's a ton of information to go through and really to look at. Scott talked about DApp. The Liquid Apps team over there, and said Ethereum can scale by utilizing EOS and DApp. And to be honest, we've talked about looking more at Liquid Apps. I've kind of mentioned it to the team a couple times. I know Pete K is over there. He worked at ICO Alert with us, and he's always a good one to have. So we got to
get him on the podcast for sure.
That's a great idea. That's a great idea. Who better to talk about Liquid Apps than a guy on the team? So let's have Pete on.
Wittgenstein himself.
Yeah, I love
for
that.
sure.
I love that. We'll have him on. All right. So are we missing? We got BNB. Let's do it.
Yeah. So back over to the other side of the planet here a little bit. I'm gonna run us through these, and then me and Deem got to run and eat some fried chicken. Unfortunately, or fortunately, unfortunately for Q, because
did you say back or backed?
What's that?
Did you say back or backed?
Back or backed? No,
backed.
I was saying we got to run and eat some fried chicken.
I think Deem is making a joke. I think.
It went way over my head. Anyway, I'm going to run through this here. I'm sure I'll get the joke after the podcast. But BNB, right?
Rewatch it.
Yeah, BNB. BNB is back. It's back up over $18 a little bit here. I know it was down for like as low, I think it was under $15. This kind of reminds me of the run up that we saw with BNB as it went to like $33 there, where it's as many have said, it's not really correlated to the rest of the market. It's kind of moving freely, which for altcoins rebounding a bit is always good to see. We talked about this a handful of weeks and months ago, where this was probably the greatest test for Binance. They've really checked a lot of boxes, whether it's from the hack or the launch of the coin itself, increasing its utility. But the launch of Binance US and how they've done that, even though volumes are low, has pretty much gone off without a hitch. So I think now that investors and users have seen that take place, and it's been a few weeks now, maybe there's some confidence growing back for BNB. The only other point there is that their volume on futures, which has generally been the case for, volume on futures, it's just up and to the right. It's increasing. Binance is that is also the case. So they're at something like 300 million daily.
That's crazy
in dollars for futures. Which, if you look at like some of the top ones, that's not too far off from Bybit, and certainly not too far off from BitMEX. So it's a wild world out there for people trading futures. Binance futures, it seems, is here to stay, and it seems they figured out Binance US.
Has anyone done anything with Binance US volume lately? Have we looked at that? Because it was super low.
Yeah, it was something like $1 million. I think
700,000 or something like that.
Close to $1 million. I think CZ said altogether it was $1 million daily. A few weeks ago or a few days ago, which is not much, but it's going to take some time. I know they're listing, I think Chainlink and Ravencoin. I think that was Binance. It might have been Coinbase, but they're listing more and more assets every day. Which, speaking of IOST, supposedly IOST is supposed to hit Binance US here in a bit, hopefully.
Is that breaking? What's happening?
A little birdie told me. If you're listening long enough to the podcast at the very end here, that's the rumor mill anyway. It's not confirmed. But
CZ has lost some clout these days. I feel like he had that situation with Alipay. Did you see that?
Oh yeah,
where he kind of claimed he pulled it. Listen, he's been hanging out with Justin Sun too much. That's basically what
that's true.
I've noticed. But he was kind of the untouchable like wonder kid like 6 months to a year and a half ago, and I think he's had some missteps with that whole big rolling back to Bitcoin blockchain, this Alipay situation. He needs to get it back. I don't know how he gets it back, but it's good to see Binance US picking up in volume. I think that's going to be important as we go forward.
Yeah, for sure. Other points on IOST here. I don't want to cover, there's a ton of news from IOST, but I don't want to cover too much since we have Lawrence on the podcast later this week. But some big ones for those out there following the Sutler Ventures node. Contribution rewards are to be released this week. So check your wallets there. Again, it won't be the full contribution rewards. The team set that up last quarter so that essentially there's not a massive amount of selling pressure hitting IOST every time the quarterly contribution rewards come out. So that will start this week. Good news there. Very interesting point that we'll talk a bit about with Lawrence as well is kind of the things that IOST is looking to do with side chains and interoperability. Kind of got some broad news on that from him and some other team members. Everybody's kind of trying to compete with sharding, but until that's really figured out and able to exist in a really efficient way for dApps, I think the move is definitely going to be side chains and interoperability. So yeah, I mean, we're going to get ready for this interview with Lawrence. We're doing it Thursday morning, so get your questions in. Tweet us any questions you have. IOST seems to be definitely in good position here, as hopefully alts rebound a bit, as hopefully BTC rebounds a bit.
Yeah. When alt season.
When alt season. We have one question from Scott, but before that, it seems to me that second layer applications, it's more important for the second layer applications to have interoperability than the layer 1 protocols. So I'll give you an example. Like you can, as a let's say Tron. We have an EOS dApp that's super popular, on EOS, and then it's interoperable with now Tron. What you're doing there is creating more for the app than I feel the network. It's the same thing for these smaller like layer ones. Like let's take what's a small,
like IOTX maybe.
Let's say IOTX. Okay, let's make Dice available on IOTX. That doesn't make any of the Dice users that are currently on EOS go to IOTX, and you're still going to have the same amount of users that you have on IOTX. So great, it's interoperable and you can use it, but it seems to me more of a benefit to the second layer applications than it is for the layer 1 protocols. But it helps anyways. But question from Scott here: is the Lightning Network making any significant progress? I haven't looked into it in a while. I personally don't agree that it will work, but I'd love to be wrong on that. I know it's off topic, just curious.
Yeah, it's a good question. I've heard a little bit about that in the past weeks. I think it kind of in response to DevCon with ETH and some of the things that were announced there. It's interesting. Like I feel like Bitcoin, whenever it comes to some kind of second layer additions, right? In this case, Lightning, they don't necessarily kind of push out their success. So it's hard to see just in mainstream media growth or pain or whatever the case may be. With that being said, we haven't heard a lot of bad things either. I would think it's growing organically, but again, I do need to kind of check in on that
because it's hard to gauge it without that, mass media coverage, I guess, or more information provided, like, I guess.
Yeah, and Lightning was one of those things that from the jump, a lot of people were kind of like, do we really need this?
Yeah.
Is the time spent on this good? Is this really needed? Should we be looking at other things like maybe privacy?
Yeah.
Which is going to be a hot topic in the coming year. So, yeah, I mean, I'm right there with you, Scott. I mean, it's one of those that kind of, I think everybody's forgotten about as more exciting things have popped up.
Yeah, and we'll definitely talk about it on the next Layer1Live. We'll be locked and loaded with more information, and we'll probably lead off with that since this was a good conversation, and we need to get more information on that for you. But that's pretty much it, fellas. I think Scott, we got to give the $25 dollars BTC to Scott. He was very engaging. We appreciate the comments in the chats. Hopefully, as we go, we'll have more and more people in this chat. This will also go out obviously to the podcast. So if you want to reach us there, just come to the YouTube channel and comment. So we appreciate that. You guys got anything else before we log off here?
No, I would just hammer on that, right? Questions answered, curiosities. Even if we can't answer them this podcast, will definitely make sure to hit them the following week. So this is your chance to come in and ask questions or talk shit on us or whatever. So
Mike looking like Jesus.
Yeah, looking like Jesus. We're here for you guys.
Awesome. All right, guys. We'll see you later. And that's it. Boom.